All right, now thanks for staying with us as we walk into trade this morning. We don't have anything smashing in the market. But if you're looking at Adani group of companies, lot of volatility. If you're looking at JP group of companies, one-way spike, and ADA group of companies, whether it's Reliance Power or Reliance Infra, even Reliance Home Finance, they've really made a comeback. Let's look at the data points here. That's Adani group of companies, the one-year market cap change. We all are scratching our heads trying to find out, bhai kya ho gaya? Why are Adani group of stocks going higher? Now the group has come out and they've dismissed, and this is not yesterday's information, this is what happened on Monday, where during the market hour the Adani group came out and said, look, there is no problem in terms of the FBI bans which a newspaper publication had reported. Now I'm going to move away from Adani group of companies. We've got the CFO joining us a little later. I can promise you it will be one of the most comprehensive interviews you'll ever see. I want to look at ADA group of names and JP group of companies and throw that at Pankaj. Pankaj, you represent a retail brokerage. The temptation of a retail and HNI brokerage is to buy something where you can see quick move. Are you getting a sense that now there is excitement, trading, action, and even participation which is there, let's say in JP group of companies or Adani group of companies or even ADA group of names?
So within the three groups which you mentioned, Nikunj, I think there is obviously excitement on the Adani group of companies, largely because the kind of a price appreciation what we've seen. But when we sort of look at and try to sort of see it fundamentally, I think market is pricing in, or the current prices are reflecting a lot more optimism in terms of the kind of future they would be able to deliver. So which is where I think fundamentally it is a bit difficult to sort of justify, but yes, there has been a good momentum in number of names. I really do not have a fundamental logic to sort of back each and every company in the groups what you mentioned. But yes, they're placed quite interestingly well in some of the domains, something like say Adani Total Gas. So if you look at typically you have IGL, which is largely placed in NCR. You have Gujarat Gas, again a regional sort of a play. And then you have MGL, which is again a sort of a regional play. So you really do not have a pan-India player who can sort of ride the shift or the energy shift from single digit to double digit. And they've bidded for a number of geographies. So from that perspective, it's a sort of an interesting opportunity. But whether that will sort of pan out in the next 2-3 years, justified by numbers, I think we really do not have an explanation for that.
ADA group, JP group of companies, for a trader, for someone who says, look, I don't care whether the prefix is Reliance or Adani or JP. I'm looking in capturing price action. Which are the strongest two-digit names from the ADA or from the JP group of companies?
In the ADAG group of companies, the two names which are very interesting in terms of a longer term structure is a Reliance Power and a Reliance Infra. So both of them have really done well, and say if one wants to participate in the Reliance Capital, it is already on circuits. But the best one we would like is the Reliance Power, because what we are seeing is a trend change across the board in the sector as well. But the problem is post the recent announcement, the stock has been on circuits and it continues to move in circuits one way, and say a day of say a pause happened a couple of days back. So overall Reliance Power, because that as a sector has turned around, so would like to bet on a company which is in a say sector which is turning around rather than something where we don't know about. So in the same way, I would rather go for a JP Power instead of a Jayaprakash Associates. So overall, I would go with the Reliance Power and say this could be, so technically I think what has happened is very few companies actually survive. So most of these companies actually go get delisted. If they do not get delisted and survive the whole cycle of 10-12 years, they could surprise over the next couple of years. So that is what we spotted at 6, but could not did not have the gumption to actually load up on it given the terrible past. But technically, this is a major formation in terms of what is happening in Reliance Power. So it could surprise over the long term, could be even an interesting play at 10-15 bucks going forward. So out of all the names in the pack, I'll go with Reliance Power.
Okay. Now let's spend some time trying to understand how should traders, and I'm here purely referring to traders, those who are in for a quick gain, how should they approach ADA group of names and JP group of companies?
So I think yes, some of the names which from the ADAG pack like RPAR, Reliance Infra, and Reliance Capital. I think out of the three names, the two are the ones which are now going into circuits almost on a regular basis. I think the last month or the entire month of June so far, and the second half of May, these stocks had gone into an uptrend, and that uptrend is met by a lot of upper circuits as well. So we need to see that how the sentiment gets balanced out into these names, whether there's a correction post the circuit gets over, whether the stock goes into a bit of a consolidation mode. If that happens, then we can probably attribute that this short-lived momentum which you're seeing into these names could probably convert itself into rallies, and these stocks have have 5 years high or 10 years high, as the case may be. So we need to try and differentiate short-term momentum as well as long-term structural change. As of now, it looks like more of a short-term momentum, but then that's what I said. So once the circuit opens up, once normal trading resumes into these stocks, we need to see how momentum builds up. Out of the other pack, and I think I'll probably refer to Adani group of stocks. I think from there, I was looking at the data for the two specific names, Adani Ports and Adani Enterprise, because both of them are in the F&O space as well. What had happened was in the last 3-4 days back, there was some higher chunk of volumes which was seen to the stock, specifically on the on the cash side, because the delivery volumes for Adani Ports, for example, had shot up to almost 35-40% on an average. This was prior to the correction which happened to the stock price. Now on the corrections as well, the 2 days of correction, that's day before yesterday and yesterday, there was higher amount of participation in the open interest for Adani Ports. So the delivery volumes had dropped from 35 to 40% on an average to almost 20% and slightly below that as well for Adani Ports. But then the F&O data showed increase of open interest. So the combined OI change for Adani Ports, for example, was almost 17% for the stock. So that generally indicates that the markets are now getting biased into these stocks more from a trading perspective rather than more from a delivery perspective. So the delivery guys are the ones which are now converting their positions and getting more into the trading aspect. So this generally indicates that the volatility will continue for Adani group of stocks, specifically the two names which I mentioned, because I do track them quite regularly on the F&O space. And as I said, that the delivery positions are getting converted in the F&O, so that will also result into heightened volatility. So these stocks would probably they would take some time to bottom out. Once the volatility settles down, once the OI gets reduced back towards a normal size, and once trading gets converted into delivery-based buying, I think that's where these stocks could probably show signs of significant bottom out.
Okay, that's a view coming in on the ADAG pocket as well as those Adani group of stocks. Pankaj, wanted to also get in your take as to how you're looking at the entire consumption basket, Asian Paints going ahead with that price hike. How are you reading into how they are nullifying or trying to mitigate the impact of the high input cost pressures?
So on paints, obviously 1/3 of the industry is unorganized, and some of the unorganized players have got impacted either in terms of supply chain sort of getting disrupted or manpower issues, and which is why we are seeing pretty healthy volume growth for most of the players on the paint side. And I think that is going to sort of continue for some period of time, because structurally not everybody on the unorganized side is expected to sort of come back. We're expecting a price hike to happen in the month of June, and I think that will sort of mitigate some of the margin pressures. But most of these stocks, if you look at, are trading quite sort of expensive. So I would suspect that they will be able to sort of beat the overall market. In isolation, yes, they can sort of keep doing well, but I'll prefer something like, say, for example, Moltech Packaging, which is again, which derives 52% of kind of the revenues from Asian Paints. Basically, they supply containers for paints. So this is a company trading at about 16-17 kind of a multiple. Double-digit kind of a top line and bottom line growth with steady margins. So I think you have place, or you can sort of play the paint cycle through a company like this. But in general, consumption, especially FMCG or some of these pockets, I think they may not be really able to outperform the overall market. I think the unlocked trades look a lot more attractive compared to some of these segments.
All right, fair enough. Getting a move on then, what's the outlook on Jubilant Foodworks, Pankaj? Did you take a look at the kind of quarterly same-store sales growth that the company delivered? That has come in at a healthy 11.8% at a time like this when we are seeing delivery growth as well pick up during the pandemic. What's the outlook on the company as well as the overall valuations?
ICICI largely are bullish biases with Zydus Wellness. I think this is one company which is sort of trading relatively quite cheaper compared to the rest of the lot, and which is why we are sort of selective biases there. So I think the rest of the pack, like I mentioned, has been sort of trading pretty expensive. I think the mid cap or the small cap or the pockets, whether it is hotels, whether it is logistics, whether it is what do you call OEM space, the auto ancillary space, I think they look a lot more interesting with decent multiples, with a decent opportunity for growth. I forgot to mention even the textile space is looking attractive, something like Indocount, which we have come up with the coverage. So you're seeing a lot more broad basing of opportunity available for investors. So I think you've got a couple of segments which are sort of expected to do well. And I think this is where, or in this pocket, we are seeing decent amount of growth with valuation being quite reasonable. So I think, so that space looks a lot more interesting.
Okay, let's talk about the big buzzers and the newsmakers. And yesterday surely was an Asian Paints day. That stock single-handedly pulled up a good 3% in trade on close. So let me take it across to Mubina, find out why exactly was it buzzing. Mubina?
After a 2.8% price hike in May 2021, Asian Paints has taken yet another price hike of 1.5% to 2%. So in its lower end segments or its value added segments, prices have increased by around 3 rupees per litre. This is in the entry level segment, and then another 6 rupee per litre price hike in the premium Royale and Ultima brands. Remember that just last week the company had announced a hike in its wood furnishings business, but remember that's a very small contributor to its overall portfolio. But it was a precursor that look, I've increased prices in the wood finishing business. Now very soon there will be a price hike coming in the decorative business as well. What's interesting is that they've also taken a price hike in the waterproofing business. This is a segment that has shown a lot of promise. In fact, I think it's sort of helped paint companies stay afloat during times of COVID. The solution-oriented business is something that has seemed to stay afloat, stay resilient, even as discretionary demand did dip. And there as well, a price hike has been taken, suggesting healthy growth in the segment. Now, this second price hike is broadly similar to the 2 to 3% price hike taken by AkzoNobel India earlier in the start of June. So, I suppose, as it's an oligopolistic structure, you should see paint companies more or less ape each other's pricing strategy. Now, Macquarie says that while this price increase does not result in a material pass-through of input cost inflation, it suggests the company's willingness to pass in price increases on input cost inflations, and dealers expect Asian Paints to make further price increases in the coming months.
Okay, Mubina, we'll leave it at that. Quite a few price hikes coming in, and the street as well is pretty buoyant on the stock. Let me also take it across to Shrishti, find out what the Amara Raja Batteries analyst meet takeaways were like. Shrishti?
Batteries hosted an analyst meet on 15th of June, and here are some of the key takeaways. The management talks about company's new theme, energy and mobility, with a focus on two areas. Firstly is the energy solution business, where the companies intend to invest in the lithium-ion battery technology and related solutions like EV charging products, battery management system and swapping stations as future growth drivers. They are looking at a global tech partner to set up lithium-ion battery plant under the PLI scheme, where the company plans to make make an investment of around $1 billion, which they see this managing through internal accruals and taking some moderate leverage as well. Secondly is the lead acid business value maximization, where the companies expect the global lead acid industry to see steady demand for the next 2 years. They are focusing on expanding domestic market share, and they are also looking for geographical expansion as well, as they see global players shifting to the lithium-ion battery technology. Overall, the management targets around 15 to 17% of revenue CAGR over the next 5 years versus 8 to 9% of revenue CAGRs in the past 5 years. On this, the Nomura shares its view. They see there is some risk that the return ratios can get depressed with the lithium-ion battery business, because in this business they see that many players could be entering to the PLI scheme, where there remains some risk due to cost competition. This can lead to higher competition and overcapacity. Initially, there is some demand uncertainty in the Indian markets as well, and also possesses some risk of underutilization. The technology is changing rapidly, and there is also some risk due to the shift towards the B2B over time. The industry leaders in this business make very low margins, but on the other hand, they are positive on the lead acid business, which may continue to perform well for the company. As of now, they are not building any of these estimates in their current market on their target price, and they maintain their neutral rating with the target price of 906 on the Amara Raja batteries.
Pankaj, what is the best way to look at PSU banks? The trading deep spell is over, or these are stocks which were cheap, they were re-rated, and now the top 2 or 3 PSU banks, especially apart from SBI, BOB and even Can Bank, they have a lot of headroom left.
So, Nikunj, valuation-wise, obviously a lot of these PSU banks look quite cheap, but I think where probably the clarity is a lot more is where the banks which will eventually get sold. I think which is where something like IDBI Bank or the other banks, say for example Bank of Maharashtra, I think look a lot more interesting. I think the asset quality concerns are there across most of the banks if you sort of exclude SBI. So I think wherever we can expect a change in management subsequent or change in ownership subsequent to government divesting their stake, I think those are the potential pockets what one can look at. Number wise, you really do not have much to sort of speak about. But yes, in case of the management changes, you would expect that the growth capital will come in some of these banks, and eventually a lot of issues will get addressed. But I think that that has still some legs. But in anticipation of some divestment, I think whatever government has already sort of cleared names for divestment, I think those are the candidates what one can look at from a trading perspective over the next 3 to 6 months.
Tata Consumer is at 700 rupees. 700 rupees for Tata Consumer. Now, where was Tata Consumer a year ago, 2 years ago, 3 years ago? Well, it was an FMCG company, but never commanded P multiples which were respectable. Now you got a new management, new business, new verticals. You try and walk into a grocery store and you'll suddenly see that they're in the category of packaged foods, cooked foods, new variety, oatmeals, all kind of experimentation also started with the brand Tata in the food business. Pankaj, what is the right P multiple for Tata Consumer? It is now nearing P multiples which are on the upper end of the range. Yet they are not the best in the industry in terms of return ratios and the brand ownership. Why are markets so excited about revisiting Tata Consumer?
I think Tata Consumer, a lot of things are sort of changing structurally. One, you had a global tea business which was not growing and which was fetching lower margins. And the domestic business started sort of picking up where the margin profile was quite higher. Although this business got impacted in the near term because you had seen a 50% kind of appreciation in tea prices, but which will subsequently get passed on. I think in FMCG, rather than sort of looking at PE multiples, it is important to look at the kind of opportunity what they would sort of unfold. And I think in the food business, a lot of formalization can happen. We have been seeing in number of categories, whether you look at poha, whether you look at dal, so a number of categories, we are seeing formalization of demand happening, and which is where I think this company is a sort of an interesting play. And which is why, I mean, compared to that, say, for example, a Colgate Palmolive, typically it's a penetrated category. You really do not expect a double-digit kind of a growth happening in that segment. But in a food business, a lot of shift can happen from the unorganized to organized or formalization. I think that is where this company is a sort of interesting play, and which is why I think as a portfolio pick, despite higher multiples, it can continue to do well. Something what Nestle has already sort of displayed compared to the other peers, because Nestle commands one of the highest multiples. I am no expert in saying 70 multiple is good or 80 multiple is good, because largely when you sort of look at ETF flows, ETF does not really look at P multiples. It is just allocation of money which happens according to the weightages which are there in a particular index. But from opportunity pie perspective, Tata Consumer still looks pretty good given the formalization which we would expect as more and more people would want to sort of switch over to this side.
Right, let's get a move on then and focus in on Tata Consumer. Goldman Sachs has a fresh report on the company today talking about driving its existing synergies. Let's find out what the target price is and why they are so bullish. Vinny is here with the details of that report. Vinny.
Let's talk about Tata Consumers, where Goldman Sachs has actually initiated a buy on the stock with a target price of 804. Now, what are the reasons and why are they adding this, stock and initiating buy on Tata Consumers? So, obviously, talking about Tata Consumers started and was formed to drive the synergies for Tata Group's existing F&B business and use this large platform which was created by the group for staple categories like tea and salt. But now, as you can see, Tata Consumers is becoming one of the key players in the staples business. They're expanding and growing organically as well, and obviously this is the group is using this platform to become a larger key player in the staples space as well. Obviously the subsidized marketing and distribution of value added food and business products is also something that is helpful for Tata Consumers as well. Now looking at the organical growth and how Tata Consumers has been growing, improving its distribution network, portfolio advantage, as well as the strong balance sheet, they have initiated coverage on this stock. Now Tata Consumers is also, they believe, is poised to drive the revenue growth using the portfolio advantage that they have, as well as obviously we're seeing a shift coming in from organized to unorganized players, and Tata Consumer surely is quite well placed for the growth also coming in over there. Talking about the balance sheet, they said that there is a strong balance sheet and they could see a growth coming in the sales as well. Overall they are expecting a 12% CAGR over FY21 to 26 is what they're expecting. Now the company is also expanding their portfolio distribution network and should also this will also further allow Tata Consumers to grow further as well. Talking about the EPS target, Goldman Sachs says the forecast for EPS is at a CAGR of 28% for FY21 to 24 expected, which is much higher than the staples peer staples, that is at 12%. So that is why quite positive on the stock and initiating coverage on Tata Consumers.
Thanks, Vinny, for giving us those details on Tata Consumer. The pre-open rates this morning, well, just about flitting between the green and the red. Remember, all eyes on what the US Fed will announce. 15,836 thereabouts for the Sensex. We're up about 50 points. Let's find out some mid-cap strategies. Kunal, your top bet?
So from the mid-cap space, Avan, I would look at GMR Infra as a buy. The stock giving a breakout finally above that 30-odd level. So that's a very, very interesting play. Short-term buys, the stock has confirmed a lot of price volume action as well. We've seen open interest built up on the 30 strike as well for GMR Infra, which also indicates that the stock could probably find a good base at those levels. Most encouraging sign when I looked at the data was a huge amount of call buying which happened at 35 strike option for GMR Infra. The quantum was almost 1 CR, the quantum of buying which was seen on the 35 strike. So that is why I believe that there is a strong possibility that the stock should see follow-through momentum. If not today, maybe over the next couple of days. 35 or 36 is where I've placed such near-term targets for the stock. Stoppers to be kept at 28.
Naresh, let's get in your top favorite. What is it that you're eyeing within the broader universe?
So that would be a buy on Cummins India, wherein the stock is making a downward channel, descending channel, and finally on verge of that channel breakout about 850 levels where it tested yesterday. Just a month back, roughly, the stock made a low of 750 on the results. The result reaction was a gap down, and since then it has made a recovery. Pre-results, the high was around 850, 860. So that is also a resistance which, if taken out over the next few days, we could look at an initial target price of 950 as well as higher. And we are seeing a good trend across the capital good names. So this could be one of the leaders going forward. So in this case, we are preempting the breakout, keeping a stop loss at 825 and an initial target price of 950.
Going to be in focus today, and just yesterday we were talking about as to how this stark underperformance from banks. Having said that, Kunal, we saw a little bit of a push coming in yesterday in an otherwise quiet index move. And Axis, ICICI Bank, IndusInd tried to push a little bit ahead. What is it that you're noticing or observing within the Nifty Bank with PSBs led by SBI and PNB on one end, and what is going on with the private lot?
Yes, Alka. So last couple of days, in fact, we've seen private banks picking up good pace for themselves. ICICI Bank leading the charge from the front. Mild, bit of I would say support which is coming across from names like Axis Bank, IndusInd Bank as well, which did pretty well for themselves since last 2-3 days. And couple that with a lot of strong performance from the PSU sides as well. So I think PNB day before yesterday was up some 4-5%. Yesterday you had SBI, which was marginally positive as well. So the strength factor coming out on the bank Nifty is also very, very encouraging. And again, as I said, that what used to happen since last 1 or 2 months was that the major load of the banking index was taken by the two key names, ICICI Bank and SBI. These were the two stronger performers. Where you've seen both these stocks taking charge. Now, if these stocks get a lot of support from other names like maybe an Axis or maybe an HDFC Bank, etc., from the private sector side, or maybe a Bank of Baroda, PNB, etc., from the PSU side, then it could just about supplement a lot of positivity back again into the bank Nifty. The reason why the markets have also shrugged off and the momentum has dropped down significantly is because the bank Nifty has gone into a bit of a time correction. So for the bank Nifty to come out of the time correction, you need many of these private sector banks as well as the high-flying PSU names. They have to start participating quite actively. We are seeing those foundations being laid up over the last 2-3 days for these banking names, but they have to convert their short-term, very, very short-term rallies into durable uptrends. If that happens, then we can probably expect even the bank Nifty to participate quite ferociously and probably come back to its major previous high of 37,000 odd.
Okay, the one stock which is also going to be in focus is Jubilant FoodWorks. Quiet mover at that, but the same store sales for the quarter gone by have come in at 11.8%. Their Domino's LFL sales growth, that has come in at 15.1%, and this has been adjusted for the temporary restaurant closures as well in the second wave of the pandemic. The delivery and takeaway channels, they grew by about 28.7% and 76.9% respectively. The average OLO contribution as well to delivery sales has come in at 98.2%. So not bad in that sense when it comes to Jubilant FoodWorks. I was just looking at a list of brokerages and how and what is their price target on Jubilant. So you've got a CLSA which ranges their price target from 3,300 to now 3,300 from the earlier 3,000. So they've revised their price target upwards in Jubilant. You've got a Credit Suisse as well from the earlier 2,450. Now it's up to 2,900. And similar has been the move from most other brokerages like a Morgan Stanley, JP Morgan, etc. as well. Pankaj, just wanted your sense. I know we were talking about the prospects of FMCG, but Jubilant FoodWorks in particular, the way they've managed to actually wade through the pandemic and managed to deliver a very strong set of numbers for the fourth quarter.
We don't cover Jubilant Food, but I think in this entire QSR kind of a format, they've got one of the highest gross margins, and so their business model obviously is one of the better ones. Like I said, we really do not have a coverage, so I will not be able to comment specific on this stock. But in general, FMCG, I think, or this kind of a segment, like I said, we're not expecting a bigger outperformance happening. I think they did their job when the markets or when the chips were down. Now you really do not expect them to sort of keep outperforming the market. I think decent enough set of numbers probably, but may not really help it in terms of outperforming the market.
Fair point. Ramesh, haven't discussed the good old favorite Cipla and Dr. Reddy and Cadila. Have these stocks run up? I mean, these stocks did very well when we had onset of the second wave. Are things looking up now for these stocks, or because that entire pandemic is behind us, pharma stocks have also picked out?
So if you look at Cipla, what is interesting is the stock has made a new all-time high, but has not come up in any of our radar because the move has been really slow. So what happens out here is the first leg was really fast if we go back a year back. So for now, even though it's an all-time high, the momentum is not strong. The only name which looks interesting in this space is a Dr. Reddy's, because after topping out back in September, the stock did not actually make a new high over the last 1 year. So it was an initial run up, and post that it went sideways. Now back in September, the high was around 5,500 odd levels. Again, back in the start of 2020, end of 2020, the high was around 5,450, 5,500. Very recently in May, we made a high of around 5,400. In the last 3 sessions, we've crossed about that 5,400 mark, and that's an indication of some bit of momentum coming in. So till the time it holds above 50 to 80, there's a good chance the stock can break out towards 6,000 odd levels. So structurally, this is a one which has made a nice range breakout, a cup and handle breakout. Although the volumes have not been very encouraging in the last 3 sessions, but the price action is still above 5,400. So it could gain more momentum on crossing 5,500 and sustaining there. So overall, out of all the pharma names, this is one which pops up on our screen in terms of a major trend change which could be possible going forward. And second one would be a Lupin, which we would be watching out for a retest of that 1100 mark. The reason we want to look at Lupin is when it broke out about that 1100, it was almost a 10x volume change which happened on that day. So it went from 1,050, 1100 to 1200 in a single day. It was a 10% move and a 10x volume change. Whenever that happens, that is structurally a strong breakout. And any fading of that move, one can look at it. So closer to 1100, 1150, Lupin would be very interesting. Also the fact that if you look at Lupin at a little longer term time scale, since 2015, it made a high of 2,000, 2,100. It is still down almost 40-50% from those prices. So it has a long catch-up trade going forward. So in the pharma names, you would be looking out for Dr. Reddy's and Lupin on decline.
Pankaj, Nuresh is making an interesting point on Lupin, and frankly that's been the disappointing stock. The specialty business has not gone anywhere. Q4 numbers were not that great. Margins are nowhere close to what they were a couple of years ago. Where is Lupin headed? While Cipla and Dr. Reddy have hit highs, Divi's is in a different orbit. Lupin is the struggling one.
I think Nikunj, some of the key facilities, especially like I think Goa, are still under import alert, and which is where the challenge lies for this company. I think the entire there is no excitement, especially for branded generics or generic players, especially having exposure to US market. So if somebody has to look for play there, I think something like Kaplan Point or something like Ajanta Pharma look interesting because their US exposure is relatively less. I think the pricing challenge in US still continues. And while the US is unlocking, you will see product approvals also happening, and even the plant approvals also will happen. And so that creates a bit of anxiety as well. I think what is sort of where things are quite clear or interesting is obviously the cramp space, something like Divi's, Syngene, Laurus, all of these names. Or if somebody has to look for the branded generic side, then you need to look at a decent blend of companies like Cipla or say something like Torrent Pharma, which have got a decent share of or a good share of revenues coming from the domestic side. At least that sort of curbs the volatility, what you see in terms of numbers going forward. Otherwise, I think pure US exporters or companies deriving bulk of their revenues from US, I think the challenge still lies. It's very difficult to take a sort of a 1 year or 2 year view. Where I think, like I said, opportunity is looking interesting is on the CRAM side. I'll not be surprised if these, with the kind of numbers they've been delivering, overtake Sun Pharma in terms of market cap in years to come. And domestic market is also looking decent. And then if you have to look for export opportunities, then I think you have something like players like Capital Point or Adinta Pharma, which I mentioned, where the rest of the market is a sort of a bigger pie for them. So I think US-based exporters, I really do not find much of an excitement at this point in time.
Okay, markets have been steadily, of course, building ground. We've seen 4 days of gains. We've seen constant inflows and steady, in fact, at about 53,000 now, closing in on that on the Sensex as well. So all indicators seem to be intact. Globally, of course, we're still eyeing the Fed, but otherwise markets have been at record. So Nikunj, as we count down to today's open, all of the factors do seem to be conducive to a positive start.
Yeah, I mean, it's going to be a flat start, and that is irrelevant. What you could ask yourself is that if you're a macro watcher, what is the importance of Fed? And what you could hear from them in terms of where they feel inflation is headed. That is going to be a very important one. If you're a near-term market watcher, well, there's nothing in terms of a news flow excepting the fact that commodity price hike is something which big companies are able to pass on, whether it is Asian Paints or a Pidilite or some other companies, in terms of from the consumer durable and consumer discretionary space. If you're a trader, you would say, look, there is plenty for me because there is a huge pot of momentum names, whether it is ADA names or JP group of names, which in a sense are really giving traders something to munch on if you really want to go down the ladder. I think somewhere, if you ask me, I would be curious to see that how long this unlocked trade would last, because during the course of second wave, frankly, markets have not corrected at all, because markets have learned from the experience of first wave that what kind of playbook we are in for. And that, in a sense, for me is an interesting trade. Will the durability of that trade continue, which is that your hotel stocks, some banks, couple of airlines, I mean, will they continue to outperform the way they've done when things started normalizing on the medical front? But first rates, it's a flat start. I mean, that's irrelevant in the overall scheme of things. I don't think we are in for any large movers or any large news dominated names today. But of course, you'll have to start with the Adani group of companies, and let's see where those names they settle. After all the yes, no, and the denial from the company in terms of nothing's happened to the FPI accounts which are invested in some of the Adani group of names, and that's where I think foreign traders the momentum is broken, and that broken momentum may not come back that soon. So Adani group of names are trading with a negative bias, whether it is Adani Power, whether it is Adani Transmission, or whether it is Adani Port. So nothing in the air which is new, but when the stocks are overowned and then there is a sharp reversal, it normally shakes out the weak players, and those weak players have sometimes compulsions to sell the stock. Reliance ahead of AGM, which is June 24th, is looking flat. I want to look at metals, especially what is the data in the non-ferrous basket. The ferrous basket, a bit of a yes and no in terms of where it is headed. Nothing in the system, there's nothing on my screen which is looking very exciting. It's a flat start with a negative bias for benchmark indices. But it's equally important for me to point out that the market breadth continues to be on the higher side. Aisha?
Yeah, it does. Let's check in on what Asian Paints, Jubilant Foodworks, some of these stocks, of course, Asian Paints after the price hikes, Jubilant Foodworks after that great quarterly performance that they've actually posted. These are a couple of stocks which are also in focus. Also, add to that, you've got Dr. Reddy's, which is going to have to pay $46.2 million as ARBI award, so look out for that. KEC International, they won a 937 crore rupee order. Wipro, they partnered with Levi Strauss for the digital commerce, so look out for this particular stock as well in trade. And then, of course, given that Brent prices are now already at $74 to a barrel, ONGC and GAIL are also going to be in focus. Strong numbers also from a Whirlpool, so look out for that as well. And Unilever as well as Godrej Consumer products. Palm oil prices have seen a bit of a dip down, so that sentimentally would augur well for both Unilever as well as GCPL, given that palm oil actually does contribute to a large part of their input costs. That said, for the market, we are holding okay. As of now, we are flat. But again, at 15,856, I don't think the market is going to give you any reasons to complain. You've got Adani Ports, which is down by about 2.6%. Adani Enterprises as well, lower by 1.5%. LIC Housing Finance, which is down 2.6%. DRL Hindalco. On the flip side, HPCL, GAIL, Indiabulls Housing, ONGC, and Jubilant Foodworks is your top performer, about 1.5% uptick. So, no big movers really, Nikunj, on either side, be it the uptick or the downtick so far.
Well, it gives me great pleasure to bring on board Nilkant Mishra to talk about